Now, the impact of growing global tensions now reaching U.S. airlines. American Airlines and United both suspending some international routes as a precaution, they say. Now, Fort Worth-based American has put flights between Doha, Qatar, and Philadelphia on hold until Sunday.
American Airlines has made adjustments to its Doha, Qatar operations.
Over 500,000 international seats are gone from American flights this year. Bookings from Canada have crashed by more than 70%. Why are airlines cutting flights and leaving U.S. airports empty? Cities are losing millions as airports go dark. Is America's sky in crisis? Stay with us to uncover the shocking truth behind this aviation disaster and why it could take years to fix. Foreign airlines are quietly leaving America, one flight at a time. Play Airlines has already stopped all flights to the U.S., ending routes to Boston, Baltimore, and Stewart this year. Air Canada has cut over 320,000 seats on flights to the U.S., a huge drop confirmed by recent OAG data. Lufthansa, one of Europe's biggest airlines, announced it will cut 15% of its flights to America. Their CEO said U.S. demand has stopped growing, and they see more opportunity elsewhere. These cuts are not random or temporary. They are happening at the same time across different airlines. This shows a clear pattern of retreat. These are not small or new airlines either. They are experienced companies that have survived past crises like oil price spikes, wars, and the pandemic. But now they are pulling back from America. They are moving planes to Europe and Asia instead. Flights are disappearing from American airports without much notice. Terminals are going quiet and some international sections are closing down completely. This is not a protest or a ban. It is a business decision. Airlines see no profit in staying, and that's why they are leaving. The trade war isn't just headlines, it's hitting the bottom line in aviation. U.S. tariffs on steel and aluminum have doubled to 50% since June, adding a staggering $50 billion in costs, says BCG. Those tariffs may also push aircraft prices more than 10%, warns KBRA. Airlines like American, Delta, and Boeing are now lobbying Washington for carve-outs, arguing that these duties force route cuts and deferred deliveries. Meanwhile, a growing Canadian boycott is slicing U.S. travel. Air bookings are down 10%, land crossings down 25%, and tourism hotspots may lose $9 billion in 2025, according to the Financial Times. Even WestJet admits travelers are skipping U.S. destinations in favor of the Caribbean and Mexico. The result? Higher travel costs, fewer flights, and airlines shifting their fleet where profits are stronger. America is becoming the tough, expensive option. And that is why airlines are pulling back. Once international flights disappear, the dollars stop flowing into cities big and small. In Buffalo, hotel occupancy tax grew to $13.5 million in 2023, largely because fewer rooms were available, not because more tourists came. In 2025, city leaders are budgeting just $3.5 million from a new 3% bed tax, well under pre-crisis levels. That shortfall means less funding for parks, streets, and local services. In Seattle, airports still earn over 30% more than 2019 from dining, shopping, and parking, thanks to high passenger counts. Yet growth has slowed in early 2025, signaling weaker retail spending per traveler. That hurts small businesses inside terminals and around airports. And across the U.S., the fewer travelers mean fewer rental cars, fewer dinners out, fewer jobs at hotels and taxis. This is more than lost flights. It's lost paychecks. It's lost tax revenue for schools and roads. It's lost opportunity and momentum for entire regions. The effect ripples beyond terminals and travelers. It shakes local economies at their core. As airlines leave America, they are moving their planes to places where money and growth are still strong. WestJet is expanding its summer 2025 transatlantic network by 10%, adding more flights and new routes like St. John's Dublin with over 200,000 seats, now on sale for travelers looking for direct connections between Canada and Europe. Air Canada is also shifting its planes to Europe and Asia, focusing on busy routes like London, Paris, Tokyo, and Seoul to keep planes full and profits high. Lufthansa is cutting U.S. long-haul flights by 15% and moving planes to India and Southeast Asia, after its CEO warned that American demand is leveling off, which signals weaker interest from travelers heading to the U.S. Meanwhile, big Middle Eastern airlines like Emirates, Qatar, and Turkish are stepping into the American market, but CAPA analysts warn they are not truly filling the gap left by others. They are exploiting the void by only choosing the most profitable routes while skipping cities that need more service. Every plane that leaves America takes jobs, visitors, and economic activity with it, which deepens the crisis facing many U.S. airports and the communities that rely on them. This aviation crisis is not just about fewer flights or empty airports. It is a much bigger problem that threatens America's global influence. Every canceled flight means fewer business deals, fewer conferences, and fewer face-to-face meetings that build relationships with other countries. Fewer international visitors also mean fewer students, fewer researchers, and fewer cultural exchanges that keep America connected to the world. Experts at CAPA warn that once these routes are lost, they are very hard to get back and can take 5 to 10 years to rebuild. Without strong air connections, America's cities become less attractive for investment, tourism, and global events. As routes skip over, the U.S. airlines, businesses, and even diplomats start looking elsewhere. This makes America weaker on the world stage. The longer this crisis continues, the more the country risks becoming isolated, losing the chance to lead in global conversations and trade. This aviation collapse has steadily worsened month by month. In March 2025, Play Airlines confirmed it will exit all U.S. transatlantic routes by October 2025, with the last flight scheduled from Stewart on September 1st, Boston on September 15th, and Baltimore on October 24th. In April, the European Union raised fees for flights to the U.S., increasing costs by around 20% compared to the previous quarter. By May, OAG data showed airlines had removed over 320,000 Canada-US seats through October, and advance bookings slumped 70% year over year. In June, Lufthansa formally announced a 15% cut in U.S. long-haul capacity, citing a plateau in demand. Meanwhile, regional carrier Silver Airways ceased operations on June 11th, further shrinking options for travelers. Looking ahead, OAG forecasts an additional 10% drop in U.S.-bound seat capacity by September 2025 if the same economic and trade pressures continue. Each month adds new cancellations, quieter terminals, and mounting losses, showing that this is not a one-off setback, but a painful, sustained collapse in international air service. Experts warn that fixing this aviation crisis will not be quick or easy, and the longer it drags on, the harder it will be to reverse. CAPA analysts say that once airlines cut routes, it can take 5 to 10 years to rebuild them, even if the market improves quickly. To recover, the U.S. may need to lower trade barriers and reduce tariffs that make flights more expensive for airlines and travelers alike. Offering targeted incentives like reduced airport fees, temporary tax breaks, or federal support programs for airlines reopening international routes could help attract carriers back to American airports. Modernizing outdated airport terminals with faster customs, better technology, and more efficient operations, like those in Europe and Asia, is another key step experts recommend so airlines see America as an appealing, competitive hub again. Improving visa processing times and entry requirements could also make the U.S. more welcoming for travelers, encouraging airlines to return. Promoting U.S. cities through international marketing campaigns could inspire more tourists to visit, giving airlines confidence to restore service sooner. Without strong and urgent action on multiple fronts, the U.S. risks letting its airports fall behind global competitors and missing out on billions in economic benefits from tourism, trade, and major global events. Analysts agree that if the country does not act soon, it could lose its place as a top destination for many years or even decades to come. America's skies are emptying, and the world is moving on. If we don't act, this crisis could reshape our economy for years. Subscribe now for more updates and share your thoughts in the comments below.